Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden secrets of corporate filings. And folks, today we have a doozy of Form 10K from Palatin Technologies, incorporated that is loaded with enough twists and turns to make a soap opera writer jealous grab your popcorn, because we re-diving deep. So what is the big picture here? Palatin Technologies is a biopharmaceutical company, and their main game is developing medicines based on molecules that interact with something called the melanocortin receptor system. Think of it as a master switchboard in your body controlling things like inflammation, metabolism, and even sexual function. They are trying to develop drugs that can finely tune these switches for various diseases. Their strategy is to craft these targeted therapies and then team up with industry big shots to get them to market. It's a classic biopharma approach. They are focusing heavily on using MC4R agonists for obesity treatment, but they also have eyes on inflammatory and autoimmune diseases. Now let's talk money, because that is usually the most interesting part. For the fiscal year ending the 30th of June 2025, Palatin did not recognize any product revenue. Zip nada none. This is a big shift from the previous year though, when they brought in over $4.4 million. The reason for this drop-off is the sale of their Vyleesi product line to Cassette Pharmaceuticals, incorporated in December of 2023. So essentially, a big chunk of their revenue stream dried up. Looking at their balance sheet as of the 30th of June 2025, Palatin had about $2.5 million in cash and cash equivalents. That might sound like a lot, but dig a little deeper, and you see they had over $8 million in current liabilities. That means they owed more than they had readily available. And this is a recurring theme for them, likely why their auditor flagged substantial doubt about their ability to continue as a going concern. The income statement paints an even starker picture. For the year ending the 30th of June 2025, Palatin reported a net loss of over $17.3 million. That is a significant hit, although it is better than the nearly $30 million loss they had the year before. This loss primarily stems from their research and development expenses, which amounted to nearly $15 million in 2025 alone. They are spending big on developing new drugs, but so far that spending has not translated into sales revenue. When we look at their cash flows from operations for the year ending the 30th of June 2025, they used over $21 million. This is an improvement from the previous year when they used over $31 million, but it still shows they are burning through cash just to keep the lights on. This is where things get really important. Palatin isn't hiding the fact that they face serious challenges. They openly state there is substantial doubt about their ability to continue as a going concern. This essentially means there is a real possibility they might not be able to stay in business for another year without significant new funding. They need that funding to complete clinical trials and development of their drug candidates. Without it, they might have to cut costs, drastically halt trials, or even sell off assets, which is never a good sign. One thing that stands out is their Series D convertible preferred stock that was issued in June of 2025. It looks like their CEO and CFO along with some directors bought into this offering. This is a related party transaction, and while not inherently bad, it does mean they are putting their own money in a sign perhaps of confidence or a necessity to raise capital from those closest to the company. They received about $340,000 from this offering. On the shareholder side of things are also quite diluted. As of September 2025, there were over 838,000 shares of common stock available from things like convertible preferred stock options and warrants. When these all convert or get exercised, stockholders will see their ownership percentage shrink, and that can push down the stock price. Specifically looking at their equity compensation plans, as of the 30th of June 2025, we see options and restricted stock units to be issued. Over 66,000 securities are available for future issuance, not even counting those already outstanding. This level of potential dilution is a big deal for existing shareholders. Now let's look at the bottom line, the stockholders' deficiency. As of the 30th of June 2025, Palatin had a deficiency of over $4.7 million. This means their liabilities exceeded their assets and their equity was negative. This is a direct result of years of losses and spending more than they made. Palatin is upfront about the immense risks they face. They are heavily reliant on securing future financing, and clinical trial results are far from guaranteed. Their stock has been extremely volatile, and there is no guarantee they will ever achieve profitability. The delisting from the Nice American also adds another layer of difficulty for them, attracting investors and simply operating. The independent auditors at KPMG LLP have also flagged these going concern issues in their report. They say the financial statements are prepared assuming the company will continue, but they are very clear about the substantial doubt regarding their ability to do so without additional funding. So what is the story here? Palatin Technologies is a company in a very tough spot. They are developing promising but highly speculative biotech products. They are burning through cash at a rapid pace, and their auditor is warning that they might not survive the next year without significant help. The sale of Vyleesi brought in some cash, but it wasn't enough to solve their underlying financial problems. The recent deals with Boehringer Ingelheim are a ray of hope, bringing in some much-needed funds and potential future royalties, but it is a long road ahead to profitability if it ever happens. In my opinion, Palatin is a very high-risk, high-reward play. The science behind melanocortin receptor modulation is interesting and could lead to breakthroughs, but the financial realities are stark. They are navigating a minefield of clinical, regulatory, and financial hurdles. Without a massive influx of cash or a truly game, changing drug approval, their future looks incredibly uncertain. The delisting from Nice American for low stock prices is a major red flag for investor confidence and accessibility. It is a company that investors who like to roll the dice on early-stage biotech might find intriguing, but for most, the risk here significantly outweighs the potential reward at this moment. Alright, that's our breakdown of Palatin Technologies' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.